Hello and welcome to the Movie Market Podcast Monthly Recap. David, we can quickly recap February, but obviously with the ongoing conflict with Iran, a lot's changed in the last week. That's worth noting and looking ahead to see what the impact may or may not be and for how long.
Sure. Thanks, Jared. So I think kind of like you said, looking back, the past few months are less relevant as far as looking ahead. But some of the things that we saw was the continued trend of value outperforming growth and continuing to have the shift from to valuations. So valuations starting to matter more. You saw international continue to do well, and also small and mid cap companies continue to outperform the S&P. The S&P really was down 1.5% for the month of February. But as you look at the equal weighted index, it's doing much better. And what that's showing is, people rotating out of the technology trade, rotating out of some of the software stocks and some of the higher valuation companies into the more value names. And if you look ahead to the economy, and look at labor, GDP, and a number of other factors, I think it's starting to be pretty obvious as to why and some of the direction that we're heading in. So as we look ahead, I think we had GDP numbers reported for the fourth quarter were revised slightly lower, and you continue to see the import-export activity fluctuate. But really the biggest driver looking ahead is going to be what happens with the Iran war, how long it persists. I think the longer that it goes, the more economic disruption you could see, and you're seeing a lot of that in the price of oil, which has spiked 50% in just the
Well,
last week.
if you look, David, if you look what's changed besides the conflict, I mean, generally speaking, the last few months, you had a weaker dollar, you had inflation easing, you had interest rates generally coming down. Now, with a week post-conflict, the dollar strengthened fairly dramatically. You've seen the impact to commodities. So inflation now is going to be higher based on oil prices alone. We'll see what trickles through. And then interest rates have actually gone up instead of being the flight to quality normally in the midst of a conflict. So we'll see how long this new trend unfolds. In short term, you've seen a high correlation. Oil prices up, bonds fall in price, and yields have been jumping with the stagflation concern potentially that we're in a higher inflation, lower growth environment. Time will tell as to how long these trends unfold. And same with international stocks. They were leading the way over the last year and the first 2 months. But with that stronger dollar, it's taken some steam out of kind of that reallocation trade that's unfolded over the last year.
Yeah. And I think, Jared, as we look at this conflict and we compare it maybe to the Russia-Ukraine war, that war started in 2022. So we're, four full years into that war. And what you saw initially was a jump in oil prices. Oil was trading around 90 at that point. So before the war started with Russia-Ukraine, oil was 90. It then jumped to about 120. And from there, it continued to ease. And still you had, the last 4 years, if you look at economic data, the economy continued to grow. And that was during a time of interest rates increasing as well. So there was a lot of other factors at play. The market, at the end of the day, ended up being, 10 to 15% lower from that point in time. But then you had the subsequent recovery, and obviously we're sitting here, way ahead of where we were when that started.
Well, and this morning, as you said, the 120 number, oil pretty much spiked to close to 120 this morning as well. So again, we'll see how this plays out in length. None of us know, if it's days, weeks, or even years like Russia, Ukraine. But then, from looking near term and ahead, the question is what's the impact to the economy, consumer spending, you name it, and the Federal Reserve, right? I mean, if you look at labor data, we continue to be a weaker labor market overall. We lost 92,000 jobs in February based on the government statistics that were out. Unemployment rate moved up a little bit. So now the Fed's in this interesting position where they all agree that inflation's going to go up based on where oil prices have moved in the last week. On the other hand, the labor market is weaker than expected. So it's going to be interesting to see which one they favor. I think it'll be more the labor market overall, if you listen to some of the commentary out of some of the Fed governors, that they believe this will be temporary. And to the Ukraine-Russia example, yeah, it spiked to 120. Then oil prices kind of eased over time, even though the war, conflict's still ongoing 4 years later.
So Jared, I guess in this time and as you have this uncertainty, what do you do? Do you sell everything and go to cash? Buy
Well, I
gold?
mean, if you look generally on the length of the conflict, right? I mean, anytime there's uncertainty, you saw the VIX this morning spike over 30, just kind of the fear factor within the markets. And again, it's hard to make big allocation changes until you see, if there's a bigger impact to the economy. Is it going to be 2022 like where the economy was weakening a little bit? At the midst of that conflict that was started between Russia and Ukraine and oil prices spiked, or is the economy still on stronger footing? We'll see, kind of as that data points come out. And again, I still think as we look to the rest of the year, valuation is going to continue to matter. So I think the value names, dividends, kind of certainty within your portfolio continue to be a place to be. And to me, you got to watch the dollar. Where does the dollar go? As the conflict eases or ends at some point. I think that'll be the big thing to watch as to answering where you go and when with portfolio allocations.
I guess during this time, how do you anticipate any kind of, spending differently? I mean, we saw travel get impacted a little bit. It's the travel market is very large, right? And obviously there's some disruption, in Europe and around the Middle East. Obviously not much in the US as we're further away from that. But what other areas do you watch for spending and any potential changes?
Well, and I think that's why the labor market's so important, David, because if your economy's losing jobs, it's a challenge for future spending, right? I mean, if you look at the big airlines for now, they've kind of said there's no drop off in travel demand, even though the jump in oil prices will hurt profits in the short run, clearly, because they hadn't forecasted a 50% increase in oil within the last week or so. So to me, it's going to be the labor market needs to remain steady. Consumer confidence has to hold in, and spending, will hold generally if you have all those factors in line.
Yeah. And I guess as we look across earnings, we're going to see more earnings coming out this week. But as we look at earnings for the fourth quarter, right? I mean they've been strong. The one thing that we've noticed is again, there's been more of a focus on valuation jar, as you've pointed out. And so you're starting to see these companies post good results, strong revenues, strong earnings growth, particularly in tech. And then the stock price really hasn't moved much. So a lot of this has already been priced in. On the other hand, as you look across the more of the value names where the results are in line, or maybe slightly better than expected, the stocks have performed much better. So we've seen a lot of stock price movement, in the rest of the market, whereas some of the bigger tech names, are really dragging things down.
And again, when you look at the short run this month, you've seen more of a flight to safety back to some of the big tech relative. But again, I think ultimately as this trends and the conflict eases over time, I think it'll be back to, kind of more the valuation because the growth rate on some of the big tech names is slowing, right? And that's hard to value, what should the multiple be? Is 40 or 50 still too expensive for a number of these names or not, right? And I think time will tell on that overall. And to your point, March is interesting at the Fed meeting next week. I don't expect any interest rate change at this meeting, but the discussion about the labor market will be interesting to watch. And then otherwise, the month of March, there isn't too much, as far as earnings front or company news to focus on overall. So I think, near term, just continue to monitor where the economy goes and what the impact and where oil prices go overall because US is independent oil producer at this point, so there isn't a major need like 20, 30, 40 years ago to be dependent on foreign oil. So again, over time as speculation within the oil markets ease, you likely see oil prices come down even if this does play out for a number of weeks or months ahead. And again, as always, from there, we'll kind of reassess things and adjust, but it's kind of our thoughts for what we've seen so far in March and what to look for ahead. So with that, we want to thank you for tuning in. We'll touch base next month.